Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investor. Welcome to this March 27th edition of Benzinga's Pre-Market Prep. I'm your co-host, Joel Elconin, along with Dennis Dick and Christopher Dyer Scalisi. Oh, man, I'm going to get this right by the end of the week. Chris filling in for Spencer, who's having a good time down at Disney World. A lot to cover here from the after-hours trading and the pre-market trading as well. We'll talk about the price action in Boeing off the city note and the emergency landing. Southwest Airlines cuts outlook because of the grounding of the Boeing planes. Merger here on this Wednesday. Centene buying CNC, buying WCG. We'll talk about the ratio there. Possible sympathy plays. We'll talk about Hunt, another shipper going crazy here, currently halted. We got some earnings to cover with Shoe Carnival, Ollie's Bargain Basement, KB Homes, Lennar this morning. Baby preview after the close, Lululemon and Five Below. Analysts are pretty busy today. We'll talk about some of the upgrades and downgrades on Wall Street. At 8:35, we'll be joined by Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. And we're going to talk some of the IPOs on the exchange. And just for a quick preview, folks, on Friday, the big Lyft IPO, I could not have found a better guest. We are going to have Eric Kroll on, who works with Eve Bobich and wrote a book about IPOs and the trends, and had a great conversation with him yesterday. We'll have him on again on Friday to talk about Lyft and potential price action in that. Looking at the market, big old range in the S&Ps overnight. Your overnight high, 31.75. Target on the upside, that's shy of Tuesday's high at 35 even. On the downside, 28.14. Don't have anything there for you, folks. Your low from yesterday is 28.06, and it's hard to predict an inside day here, but that's what we have so far. In the S&P 500 futures, covered that. Crude down 23 cents, really struggling to stay in the 60 handle. Gold up $2 at 13.2440. Silver in the red by a couple pennies at 15.41. And the Bitcoin futures, Dennis, your dream may come true. Trading up $115 at 4015. So
we're gonna get that 4,200. I'm telling you, man. Look at me being the Bitcoin bull here for the last month. It's slow, steady, but it's trying.
Yeah,
that dream, and just to clarify, so about a month ago, I had a dream when Bitcoin was, I think, 3,700. That Bitcoin went to 4,200, and I woke up and told everybody on the show. I said my dream said it's going to 4,200. So if I'm a Bitcoin trader, I belong, but I'm not a crypto trader, so I wasn't long.
All right,
I'm paper long. I'm doing a paper.
A paper trade.
I'm selling it for.
It's good to paper trade. Let's first cover some of the news from after the close. I'll get it out of the way, Dennis. I know this not real happy about this one, but the Boeing news.
Jesus. It's always interesting. Here I am on the show for the last 2 weeks saying the headline risk in this thing is crazy. So obviously, that means I'm going to stay away from it. Well, it doesn't mean I'm going to stay away from it on a day trading basis. I might be in it. I might be out of it. I still trade Boeing. But here it's kind of ironic that I've been warning everybody about the headline risk, and then I got caught in that bad headline. So anyway, Citigroup came out, kind of a bullish note just about 10 minutes prior to the headline from last night with the emergency landing. And they put an argument with a price target of up to $500. So the headline basically reads, Citigroup reiterates buy price target 500. So I bought some Boeing on that Citigroup note, thinking, okay, well, this is going to be, a confidence booster for the stock here, and it could get a lift of a few points off of this. Then you dig down in the details of the note, because you're buying on the headline. And I mean, when you're headline trading, you don't have time to read the note, especially as a human. You have to just react and buy. read the note afterwards. So then you're like leafing through and you're looking, and he's got an argument like a bear scenario of 220, and I'm like, this isn't even bullish. So anyway, so I tried to wiggle out of, my Boeing. I actually did get out of a little piece of it, just because I was like, this isn't going to probably move it up. And then all of a sudden it starts collapsing, and I'm like, oh, there is another headline. There's something that's happening. And I watched the thing go 369, 368, 367. I'm like, oh crap. And then you see the headline, and it's going to be an emergency landing. So I'm like, I'm in trouble. So, you don't know what the details are on that at the time either. So I hit the 365 bid. It goes all the way down. I think it went down to 359, didn't it, Joel?
Yeah, actually, I think
on that initial, you can see the spike. It's all happening. This is all happening within like 10 seconds.
Let me see.
I hit
here.
the 365 bid, and it was like 359, like 2 seconds later.
Yeah, I got a print of 359. That's correct. And I think someone got some price improvement. DA8. I don't know if you're new to the chat. I don't see that name too much. He had an order to buy a 360. He did not get filled when it dropped to 359.
Yeah, but it was an after hours order.
I don't know.
Have orders out there, and if you're on different exchanges, you can get traded through too. So the trade through rule, which is when you're in regular trading, only applies to the regular session. So it might just be on one specific exchange. So believe it or not, after hours, you could be bidding 360 on ARCA, and it could trade 359 on NSDQ. Nothing you can do about it. Trade through rule doesn't apply, and the trade through rule only covers the top of the book. So when you're looking at 365 bid, it's only the NBBO that's really protected, which is top of each. It's not exactly NBBO, but it's the top of each order book on each exchange is protected during the regular session, meaning that has to trade. But there are scenarios where if the top of the book is 369 and you're at 368.80, it can actually trade 368.50 through your bid. So funny market mechanics there. I've written this up before. If you're interested, I could post the article just explaining how trade throughs work. But the trade through rule, which is out there, only protects the top of the book and doesn't apply after hours.
Yeah, it's tricky on that, but Boeing, just we're back here. As it turns out, they were going to ground the plane unrelated. That's why you got the quick rebound back, still trading down the stick. I mean, it's just a tough trade. It's a tough trade here until
this headline risk.
Yeah.
But I wanted it's a teaching scenario here. And when you're on the wrong side of the trade and you've got to react, and it looks like emergency landing, that sounds really bad when they're emergency landing one of these planes again. You're like, you don't know what's happening. You just see the headline go by. You gotta get the hell out. Get the hell out and protect your capital. That's what we're in the game. We have to protect our capital. So it looks like I did a really bad trade because the thing's at 369 this morning. But do I regret the sale at 365? No, because at the time, with the information that I had, this thing could fall 40 points on that. If it's a real emergency, or if we, heaven forbid, we get another crash or something, the thing could really get annihilated. So that's why you've got to be, careful always when you're trading. You got to protect your capital at all costs. So, yes, we get more information 2 or 3 minutes later, but at 2 or 3 minutes later, it's already too late. The bids are gone. So if the information would have been worse, or if there really was an emergency, obviously the headline wasn't, what, it was, and it wasn't an emergency. I think it was only pilots on the plane anyway, so it wasn't even people on the plane, but we didn't know that at the time. And as a trader, you've got to trade the information that you have. And you've got to be quick to react. And do I regret that? No, it actually went to 359. So I actually was quick to get out. I just missed the 369 bid. I tried because I saw the headline and it was still 369, but it was so fast. You got to react. Like all this happens in less than 10 seconds. So you've really got to move.
It's great that you talk about that, Dennis, because
I'm a headline trader.
Yeah.
I'm trading off the headlines. I'm using all the news that I possibly can to make the best trading decision that I possibly can. And new information comes out on a stock, I will try to buy it. New information, if it's good, I'm going to try to buy it. If new information is bad, I'm going to try to sell it. That's just, using the information and being as informed as you possibly can.
All right.
And after hours, when you're trading after hours like me, there's always risk. During the day, you don't get as much news, but I like trading headlines. I make my living trading headlines. So I'm going to continue to do it. And sometimes the headlines aren't going to work for you. And in those situations, you've got to get out and minimize the damage as best you can. So never be afraid to take a loser.
And Spinner makes a good point here. During earnings season, hey, we come out with a Q3 beat, but guidance is horrible. And, you see those kind of things too. So just trying.
And there's interpretation and obviously, there's money to be made by actually leafing through. And that's why you leaf through this stuff afterwards. You know, sometimes you just have to trade on the initial headline. And sometimes, like, people think you can't beat the bot. Sometimes you can. And certain things, the bots aren't programmed, you know, if it's wishy-washy, they're not programmed to read that. So it's in the news interpretation where you can really take advantage of, you know, maybe a situation where the bots read the headline news wrong. I mean, we all read the headline, you know, the headline of the Boeing Citigroup note wrong. It looked bullish. The headline on that note looked bullish. And you leafed down through, and it wasn't really bearish. It wasn't really bullish. It really was, they gave an argument both ways. But I mean, sometimes the headlines are wrong. And in those situations, you can make money as a human trader. So don't ever let anybody tell you that you can't beat the bots. I use very little automation anymore. I used automation a lot back in 2004, 2005, 2006. You're worrying about trading automated now. You're so late to the party. I mean, yeah, there's going to be situations where it's automation can help you. And I still have some automation when I'm sending bulk orders and doing different things. But I mean, the flat out, you know, automated, you know, market making or, you know, reading headlines from an automation perspective and trying to beat, you're never going to beat the bots on that. I mean, on WCG, when that headline comes out last night,
let's go to that. Let's go to that.
Yeah, let's go to WCG. It's a good segue. But that news broke on Bloomberg. So and the exact time of it was, I don't have it in front of me. I think it was like 5:05:42. Okay, and literally 5:05:42, the stock trades up to 255. So in 0 seconds, it trades up. But there's still that after effect. You know, okay, oh, this is just a rumor now. So now the bots have bought this up 24 points on a rumor. Is it going to come true? I mean, anybody who was buying this last night, it traded up to 265 on the rumor last night, Joel, that CNC was going to buy them. It's 260 this morning. So here your rumor came true, and you still lost 5 points because you got a little bit overexcited. So anyways, give us the news here, Joel. Overnight, WCG is getting acquired this morning by CNC.
Actually, I see a print at 287, Dennis. I see a print in WCG at 287. Okay, here's the news. Centene, symbol CNC, is going to acquire WellCare for $305.39 share in cash in stock. It's 3.38 shares of Centene for you that are doing the ARB here. $120 a share in cash. So if you are doing the ARB here, it's a little not convoluted, but you got to figure in the cash component. We're trading a little bit of a discount, huh, Dennis?
Yeah, so 3.38 plus 120 cash. So it's 3.38. So for every dollar that CNC moves, and you have to let the dust settle. Usually you come in risk arb a couple days before the risk arbs really find their home for it. Sometimes they can find it a little quicker, and sometimes there can be some money made just when they don't give as much of a discount as they should. But it's going to be 3.38. So going forward, WCG is going to move 3.38 times CNC. So that's all you need to know. So CNC is down $1. WCG is going to be down 3.38. That's what you'll need to know going forward. Now, obviously today, you know, we're pricing from, you know, before the merger. So you can't use that, you know, in the pricing and look at it today on that. But that being said, you can quickly just do the math. So if we go and take our trusty calculator here, I'll bring it up. So bringing up a calculator. So it's $50.39 bid right now. So 50.39 times is showing you for the exercise. So you can figure out how to calculate times 3.38, basic math, equals $170.31. Then plus the 120 will give you a price of $290 for WCG. So if the merger goes through right now and you were short Centene and long WCG, you're looking at a 30-point discount. So yes, it is a significant discount. Not surprising. Think about all the scrutiny that the Aetna deal had before, and we've seen some of these mergers actually not go through. Who was buying? It wasn't Humana merging with somebody before, and they shot it down. I can't remember who, but we've had some consolidation in this industry before. I don't think they're going to shoot this one down. So obviously it's the risk arbs are putting in a 30-point discount for a reason, that they think there is still some risk to the deal. But I don't think that's the case. I don't think they're going to shoot it down, but that's a pretty significant discount. So Jimmy A, correct. Oh, over 10%, $30 on 230. So significant discount.
I just find this merger extremely interesting in the environment that we're in. And I'm talking about the political environment, what Trump's trying to execute in the healthcare sector. So a lot of speculation on this one. They did hit the CNC. That's trading down 455, trading a premium here, trading at a discount. Dennis, do you keep like a slide rule, or what do you, how do you keep when you're doing these ARBs? I know you're going to let it shake out today, but are you just constantly doing the math in your head, or do you have a spreadsheet? How do you do that?
Well, it's not hard once it's priced for a couple of days. I mean, you can see CNC's trading down $1 and WCG is only down $1. You can quickly say it's 238 out. I have a sheet of paper with all the deals on it.
Okay.
So I just, and literally I logged it down. I already wrote it down this morning. WCG, CNC 3.38. So just to know, I mean, like there's stuff like STI, versus BBT, 1.295 is the ratio. As soon as I get that ratio, it's written on the sheet of paper, and then I know going forward. So I know what it's supposed to be trading. Now, risk arb has risk involved. If a deal falls apart, those ratios are meaningless. And, you see people spill out and get, the risk arbs get the beats when that happens. So, I mean, risk arb, there's always, risk in any deal. Certain deals have more risk than others. I mean, on the BBT STI, let's quickly, just for comparison purposes, we just showed you a 30-point discount on that deal. Well, BBT STI, if I go grab my calculator right now, just, looking at it here just to get to the actual math on it. So BBT, so we take a 45.33 close on BBT, and you got to multiply it times the ratio of the takeover is 1.295. So it's equal to $58.70. STI is currently trading at $57.70. So only a 1 point discount on that. So the risk arbs are saying, and a lot of that is going to be the time value of money. So it's almost no risk to that deal is what the risk arbs are saying, as opposed to this deal that has a 30-point spread from the current price of CNC. So you can see the risk arbs price in, a lot more risk on deals that potentially could go up, and have antitrust issues.
All right, stock's getting hit on this. CVS, which had been in a rally mode off the low, aided by an upgrade. I can't remember who it's from, but this is coming back and filling a gap for you here. You had a gap in the 53 handle. You're coming down to fill that. Also, we got a lot to cover here, but I'd figure a 50% retracement from the low of 51.93 up to $58. That's easy 6-point move, 3 boom. 55. If this is a true rally in CVS, you should get back over 55, but trading $1.34. So weak stock that had a rally. I also see WBA is trading in the red by 42 cents. Boy, we were struggling.
This is CVS, so this is going to be directly at them. WellCare, here's a note from Wells Fargo, just to give you some perspective. WellCare could move $15 to $20 billion of spend away from CVS, is what Wells Fargo says. So there is some, this deal is not good news for CVS. And that's why you're seeing CVS get hit this morning. Is it a disaster? No, but Wells Fargo thinks 15 to 20 billion. That sounds significant to me. So that's just one analyst commentary there showing you. So that's why CVS is trading down at this point. So if you're scrambling for, whoever downgrades CVS, there's no downgrade. It's just trading down on the WCG deal.
Okay. And boy, we were struggling for some sympathy plays, and the Brentster helped us out. Probably the most valid one is MOH.
Yeah.
Molina Healthcare, and that's trading up $1.90. This thing got smoked yesterday. Holy man.
They all did.
Yeah, they did. They did.
I mean, WCG got hit, and that's, off of obviously all the commentary that we had there yesterday.
Yeah.
Okay.
I don't know. Some overhead supply here. Maybe I'll just tell you where this got to in the after hours, or excuse me, pre-market trading. Not a lot of volume, but you did get to 135. Very hard to pick a resistance level here because you had such a bad day yesterday. So maybe people are going to use this to get out on the get out from that bad. Boy, what a horrible day yesterday in the issue, but not seeing a lot else as far as sympathy plays. The other companies we mentioned are pretty big, and they're more likely to be the acquirer than the acquiree.
That's just it. How much you can look UNH and CI, and you can look, but UNH is huge. I mean, UNH isn't going to be the acquired one. It's going to be the acquirer. So you can look more like CNC on that. And obviously, if you're going to see more consolidation, it could be UNH that buys one of them. We can see what the acquirer does. CNC trading down 8% on this. So I think MOH is probably the most, and thanks, Brent, for bringing us that one. That's probably, obviously, it's already trading up. It's traded up 4 sticks at one time. It's come off those highs here a little bit here this morning when the market started rolling over. But this morning, this was trading over 135. So it's down on 133.40 offering. So it is coming in. But if you're just trying to think about who might else be out there that might get acquired, you think about MOH.
All right, we got to talk about HUNT here. It's that time of the year, or that time where
once a year you get one of these little stocks that just explodes. It's usually one of these dry shippers or whatever the hell they are. Anyways, this thing went from $10 2 days ago, went up to 20 the day before, and over $100 it got to yesterday. So it's just these things just go crazy, and I don't know what it is. If it's just everybody gets excited and the bots are in there and it's momentum. I was looking at this thing trade yesterday a few times. It had 10-point spreads on it sometimes, like 85 to 95. We're okay. Here we are. We're 90 to 100, 90 bid at 100 offers. So 10-point spreads, 10%. And then you're trying to work the spread, or people are just flat out lifting offers. I mean, you're already down 10% when you're lifting that offer. So anyways, again, people get excited. They want it, the rich money. They want to get rich fast. That's the whole American dream, right? And Canadian dream for that matter. Get rich as quick as you can. I mean, these are the kind of stocks you feel like you can do it on. I tell you, these are the ones you go broke on. I'm going to say it again. It's hardest stuff to trade. I don't trade this stuff. I might trade some pure plays, but trading the leaders and stuff like this, I mean, it's halted now. So here you are, you bought it at $95. Now it's halted. And the regulators want more information. And there's probably no information to be had. The company's probably going to come out and say, well, we don't know why our stock was trading up. The thing reopens at 50, so you just lost 45 points. I mean, right now I have a market 53 to 55. I don't know if it's going to reopen here today. I don't know if it's going to take its time, but I would imagine it's going to open significantly lower. So sorry for everybody who held this overnight and dreams of 500. I think you're going to actually be down significantly when this reopens.
I'm not even going to do any technical analysis on this one because it doesn't make any difference.
Oh, meaningless.
yeah,
charts meaningless. Everything's meaningless. So, you maybe, I don't know if anybody's short the thing, but, obviously squeeze there too. But NASDAQ is asking for information on the trading and company, and they're waiting on that. So we'll see when the company responds to that. But there probably is no information. These things just get silly and go crazy. And that's what you saw yesterday. You are seeing a lot of stocks take off this morning and even yesterday. In sympathy, and it's all these bulkers, shippers or whatever. CTRM is one. It closed at 10.15. Shockingly enough, it's trading at 15.50. When the dust settles, I expect this to be back down. It's going to go to 15, 20, 30, 50. Things can go anywhere. It's why you can't come in here and short them. But I tell you, if you're long these things, take the money and run, man, in my opinion, because these things almost always come back down. So I think when we look at this 6 months from now, it's back to $4, in my opinion. Is it going to go to 30 in the meantime? I don't know the path to get there, but I know this story ends ugly. EDRY is one. It was trading up yesterday. I'm just trying to go through a bunch of them here. GLBS, it's trading up 24% here this morning. It's got Maritime in the name. Woo-hoo!
Oh, yeah.
Yeah. Dry Ships is even getting some love, and it's up 20 cents. Thicker one. I don't expect that to hold on either. There's Sino, SINO. It's bid up here this morning. There's there's NM you could look at. It's trading up 14 cents, which is Navios Maritime. There's NM. Like there's 20 of these things.
We'll stick with the mantra. If you're good at trading these, then continue to trade them. Just not, very hard to define the risk reward ratios in these two. So good luck to everybody that's trading.
When these things get these rip your face off rallies, if you are along them, ring the register. That's all what I would say on this stuff.
And moving on.
Obviously, just my opinion.
Yep. That's what the show is about.
We're giving thoughts. We're giving ideas. We're giving our thoughts.
So the
anyways, that
news,
was crazy move though, Hunt. So, and I should give some props to
who?
Actually, the one guy I follow over on Twitter there, he was talking about HUNT the day before. So he was actually just saying this thing's taking off and talking about it, and that is Jim Davis on Twitter. So he calls himself the JG Wizard. He makes me laugh. I follow him on Twitter, and he makes me laugh all the time.
Okay.
But he's always giving calls and stuff. And anyways, he actually was all over this one, and he was one of the first ones when I'm looking back at Twitter to be on it. He was talking about it when it was $20 from the day before, and obviously went over 100. But anyways, if Jim Davis, hope he made some money on it.
All right. The Boeing news is having effect on the other airlines companies, right? And right now, Southwest Airlines said it's difficult for the company to forecast the impact of the MAX grounding beyond Q1 2019. They've also updated and said despite the ongoing effects of the max groundings, the company current operational performance is solid. So they gave you the bad news, and then they came back with a little like okay news. Boy, I mean, the company comes out and says it's tough to predict earnings. I think it's kind of hard to hold. Down 98 cents here. They really slammed it down to very little volume, traded at 47.50. But once again, subject to headlines, company coming out telling you they're not sure of their performance. Hard stock to hold on the long side.
Yeah, it's been hit on this already. We know, obviously, since the Boeing news broke there, and you can go back and look at the chart, obviously LUV was hit with it as well. It's down basically 10% since this whole Boeing debacle started. So at a certain point in time, you got to look at it and say, is it all priced in? Maybe this is, the last commentary, and maybe this is the washout, and this is it. So I don't know. I mean, a lot of the airline stocks have not performed well here over the course of the last month. Airlines were actually doing very well, a lot of them, just looking towards the beginning of the year. You can look at a UAL and went from 80 to 90. Well, in the last month, it's given it all back and is making new lows. So LUV, same story, had a great start to the year, going from 46 to 58. And now we're talking about giving it all back. American Airlines, AAL, started the year at 30, ran up to 36 quickly in January. It's given it all back too, and it's back at 30. So I guess these things are back at support. Where we were in December and January, but the trend still is not your friend on any of these airlines. I mean, American Airlines was $56 back at the beginning of 2018. It's 30 now, so you can almost say actually it was 59. It's almost been cut in half. American Airlines, UAL. It's funny that their charts are all different. UAL is not down at all in that period of time. And Spirit Air is up. So Spirit Air is up since that time. So it's funny, there is some separation here, but I'll tell you, over the last month, they're all pretty ugly.
All right, let's do a quick earnings recap here. And boy, oh boy, are they having a good time at Shoe Carnival, SCVL. They posted a beat here, Q4 EPS beat of 3 cents, 9 cents versus 6 cents. They beat on sales by a couple million as well, 234.7, topped estimates at 232.84. They gave some guidance for fiscal year 2019, 260 to 270, and the revenue over $1 billion here. So, boy, Dennis, you made a good call on a triple BY yesterday and eventually gave you a fade. This one, a little trickier, traded up 582. Got up, not quite 20% yet, trading near the highs of the pre-market session, 36.85 stands as your pre-market high. I tell you, I would have to stay out of the way in this one until 38. And I know that's still, $1.80 away, but I look at all these highs at, actually, is it 38 or 39? No, it is 39. I see 1, 2, 3, 4, 5, like 6, 7 highs between 38.50 and 39. That's my area of resistance if I was long, but I'm not. So
Remember my 20% rule, though. There's always a stock. It goes up 20%. When you have a retail season, it seems like every day they have a couple retailer stocks reporting. There's always one that's either up 20% or down 20%. So your stock of choice here is up in Carnival or Shoe Carnival here today, and it's up 18.77%. So we'll call that 20%. So it's holding to my little 20% rule. It's a bit of a joke, but it's like probably just selective perception on my part. But it seems like we always got a 20% mover from a retail stock. When you only have 3 or 4 reporting, not a lot of candidates go up or down 20%. But retail stocks just move on their earnings. And yeah, I think you're making a good point. Lots of overhead supply. You got 37.38. You've got a lot of people who are probably going to be happy to ring the register and get their money back in this. But these things sometimes these things can go and hold on for a couple days too. And sometimes you see some gaps and go. So it's not a slam dunk that's just going to give it back. Although if I was long it, I'd be ringing the register.
And I doubt there's much option volume here. People playing the options to kind of lock in gains here. But take a look at your open
let's
interest.
Let's go check it out if there was any open interest. I'm just curious myself. So just looking out to, I don't think there's weeklies on this probably. So probably just got to go to the monthlies.
April's, yeah, I don't.
On Shoe Carnival.
Don't have.
Yeah, there's very little, Joe. Actually. I'm trying to just look. Nah, you're talking like there's 119 open contracts at 35. And think about that. They're not even making money really. So here, because it was $1.10 yesterday. It was $1.10. That's unbelievable, eh? Stock closes at 30. and this is May. You had to go to May because the Marches are off the board, so they don't have any. They don't even have monthlies on these. It don't look like, unless I'm missing. I don't even think there's.
No, you probably have it. All right. So
what do you see? We don't have it.
I don't have. I don't have.
I looked at McCoy. I didn't bring up my options platform.
I don't have that platform open right now.
There's not a ton of options on this thing though, so not a lot of people making money on the options.
All right, Dennis. Real quick before we go into imbalances, have you been doing any analysis on the DWDP breakup? How to trade it?
When is this happening? Is what I want to know. I know Dow's going to come in. Do we have a date on this yet? And no, I have not been doing any analysis on it.
Okay.
Sometimes you'll sit there and you crunch numbers on stuff, but let's go check out DWDP and see if we can find an actual date because they're spinning off Dow.
Wait, did they? Well, what are they
doing?
They
bought down and
what are they doing? What are they doing? Well, because they saw their stock.
They're spinning off Dow Chemical, which they bought like 3 years ago. Now they're spinning it back off. So I don't know if we have an actual date. Guys in the chat, if anybody's following the story, if you got a date for me, I'd like to know that as well. I can do some research here, but I quickly just tried to look at my news feed just to see if I can see it. April 1st.
Yeah.
April 1st. Excellent. Trader. This is why your chat's awesome. Trader Head NYSE, April 1st next week. So I think it's going to go under DOW, I believe. So the spinoff right back to what it was because Dow DuPont got bought. Remember, it's DOW and DD, and then they merged them. And then we came up with DWDP. I guess we're going back to Dow Chemical and DuPont.
And do you know where Dow Chemical?
The demerger.
Dow Chemical, where their headquarters is?
Monroe, Michigan.
No. Midland, Michigan. You were close.
Midland, Michigan.
Yeah, Midland Dow. Let's see here. Let's imbalances. S&Ps are only down 250, 28, 2050. I didn't see a lot of movement off the at the 830 tick here, so I imagine the mixed imbalances.
Square 89,000 to buy. Positive commentary for Square though here. So let me just give you that. We had an analyst initiate. So this isn't an upgrade, but they initiate outperform as Macquarie. I'm trying to just grab that and see. Yeah, Macquarie initiates Square at an outperform, puts a price target of $94 on it. That is why Square was trading up in the pre-market. That's why it has 89,000 to buy this morning. So you got an analyst coming out here and giving Square a little bit of love.
All right,
that's really all I see. They're all small.
Yeah.
So like Disney's 27,000 to buy, Ford 142,000 to sell. Nobody cares about that. CVS is 21,000 to sell. We've already said that's down on the WCG takeover. They're small. Yeah, small.
Just a few Square traders. I've been keeping an eye on this one just because you know how I like to do my 50% retracements here. And you had that high at 101.15, the low at 49.82. Basically, a little over a 50-point move, and half of 50 is 25, 75. It keeps dancing above and below that. So trying to keep an eye on the price action in that one, but trying to trade around 75 will get you chopped up pretty good. Let's sneak in one more earnings report here before we bring on our guest. And do you want to do Ollie's Bargain Basement or KB Homes?
Go KB Homes.
KBH. Okay. I will pull up.
Oh, that looks juicy at 25. I just looked at 24.95. What is at 25? I got to go to the book. You can just predict these things. I haven't even looked at the book or anything on this, but you see all the stock trading at 25. You see offers at 25. You're like, I bet there's something at 25. Let's go take a look. No, you know what? There's nothing there yet, but maybe it's people speculating that there is going to be something there because it has not been through 25 in a long time. So I only see 2,600 shares there in the book right now, but I bet you there's going to be more there. I bet there's some size at 25 that's hiding.
All right, hidden size. 25.11 is your pre-market high. You're breaking out at 24, so I think I'd be more inclined to buy it on a pullback to 24 than trying to short it at 25. Historically, and we have empirical data to back this up, but a lot of times these housing stocks, they get the pop and then the drop here. So look for a potential fade here in KB Homes. All right, it is 8:35 here. We're going to bring on Jonathan Corpina. He's the senior managing partner at Meridian Equity Partners, and we're going to talk the market, the floor, and some IPOs. We'll be right back with Jonathan. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Elconin, along with Dennis Dick. We are joined on the line by Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, joining us live from the floor of the New York Stock Exchange. Jonathan, how you doing today?
Gentlemen, good morning. Thank you for having me.
Yeah, love having you on here. First, I just want to talk general market. Very, very dovish Fed last week interpreted a couple different ways. Inverted yield curve has people heading for the hills here. What I wanted to ask you about is the end of the quarter. It was a rough quarter at the end of December. You're having one of the best quarters in a long time. You think we'll just see some, position squaring? Dennis talked about historically a run up into the year-end quarter to make your longs look good. Any feel for, maybe consolidation or how the window dressing or undressing will be?
Yeah, I mean, that's exactly what I was going to say. It's window dressing that we see at the end of the quarters. I think, historically that's happened, but in today's day and age and the way we've seen the different, volatility in our markets, I don't think we see it as much as we've seen it in the past. And especially in a quarter like we're seeing now with, S&P up, over 10%, the window dressing doesn't need to come really into effect at this point. I think what you do see as you get towards the end of the quarter, end of the month, is just portfolio managers just kind of, tying up some loose positions, making sure they're positioned accordingly going into the next quarter, use their allocated amount of cash and capital that they have to put into the markets, and just kind of make sure that all their books and records are everything are in place. Just because of the fact now that we've seen many 1% moves in this market over the last couple of weeks here, that it's better off to kind of stay on the sidelines and let the market figure itself out in this short period of time, and then come back in April and get back into play.
All right. And just as far as potential catalyst on the upside, do you feel that a trade deal with China is factored into the market already? Or, we just go up on them and then we come back down, we go up and down. Any feeling with eventual deal, the action in the market?
Yep. I don't think it's priced into the market yet, just because we've been discussing it for a long time. The rhetoric between U.S. and China has gone back and forth over who's flexing their muscles bigger as far as, what's the monetary value of the tariffs. Every time the president tweets out something that we're close, in fact, we haven't gotten close. There's been this conversation of something that's going to happen in April. China comes back. They say they don't think it's, we're looking for deeper down the road there. So I think when it does occur and when we get, significant information and a better blueprint of what's going to happen, yes, that will be market moving. I just don't think we're seeing the impact on the market now because investors aren't fully confident that we're going to see something soon.
Okay. And I just got to ask you before we go to talk to some of the IPOs here. I just got to talk to you a little bit about Boeing. And you deal with larger companies, institutions here. This kind of news, this kind of volatility, are they, how can you be, if you have a large position in this, right? And you've been an institution and you've been in this for a long time. Obviously executing on that day that it happened, it was a lot of chaos here, but holding the bottom of a trading range here. Any feel on, institutional holdings for Boeing and, it's obviously a headline stock. It's hard to make predictions, but just wanted to talk about the order flow in Boeing since the news.
In this type of stock and in this situation, this scenario, we've obviously seen a tremendous amount of volatility, whether it's from day to day or intraday. And what we've seen is that when our institutional clients have made that decision to either get into this stock as it's dipped down or get out of it as the news comes out, you can't get too picky and you can't get too choosy because this thing can move $1 in no period of time. So from our institutional client side, they're convinced when they want to get in and convinced when they want to get out. And it's not as much as price. It's more of timing and liquidity. They'd rather move out of the stock or get into the stock in a quicker fashion and then worry about the price valuations later. Because at the end of the day, as more information comes out on this and more investigations and longer periods of time as this stretches out, I think we'll start to see some stability in this stock.
All right, let's move on to IPOs, and big IPO on Friday. Lyft, I saw pricing 62 to 68. Don't quote me on that here. Boy, oh boy, company made some money, loses a lot of money here. I guess the first thing I want to, I'd like to ask you is like that opening print. I don't know if you're involved with any of the underwriters at all, but boy, I guess that's like the good old days, huh? When you go out to the pit and you have, of course, the electronic orders coming through as well. Talk about your experience with the pricing of IPOs.
Yeah, so listen, I'm happy that the spigot is finally back open again in 2019. It's been quiet for a while. We had the government shutdown, which affected the SEC, obviously, which pretty much shut the entire IPO pipeline from moving forward. So happy to see that moving. Yeah, we got some great IPOs that are coming down. We had Levi's last week. Like you said, Lyft is listing on NASDAQ this week. NYSE is looking for Pinterest. They're looking for Uber, and a lot of these companies that are out there. I think in these scenarios and these high profile situations, what you see from the underwriters is a somewhat of a dragging of the feet process when we get to this initial price discovery on this one block opening trade. There's so much interest that's out there. There's so many institutional investors that have put their interest in and then want to make sure that they get allocated the right amount. You've got the retail investors who obviously want to get in, get shut out from the IPO process. Their interest is coming in on the opening. And then you've got the other side of it where you've got the institutional investors who've gotten shares and they want more. So they're going to be buying more into this on the opening. So with all those moving parts and all those moving components and all of that is happening with different multiple underwriters, right? There's not always just one. There's a lead or a co-lead, and then there's layers below that. Whoever's running the book on that from the upstairs underwriter point of view, they're trying to collect all this information, all this data, all this order flow, and then funneling it down to the DMM on the floor of the New York Stock Exchange, who then takes the additional order flow of what's coming in on the book and what's coming in from the floor broker community and trying to find that right price. We find that on the IPO process, speed isn't always the right answer. It's getting the right price. You don't want to open a stock. We'll take Lyft, for example. You use, 62, 68. If that's the price range that they're going out and this thing opens at $72 or $73 or higher than that, and then immediately falls down $4 or $5, people aren't going to be happy about that, right? The underwriters didn't price it right. The people who bought on the opening aren't happy. The people who sold on the IPO, the insiders sold at the wrong price, and then you see a lot of volatility. What you'd like to see is an IPO open with significant volume. And when I say significant, they look to see at least 10% of the float, right? So if there's a 100 million share IPO that's coming out, they want to see at least 10 million shares opening, and it's not going to open until they get that amount of flow. So that's something you can look for also as far as volume is concerned. Once they get over that 10% threshold, it really is go time from there. But finding that right price and making sure that there's not a lot of volatility after is really what's the key component after the stock opens.
All right. Thanks for that explanation. Levi Strauss coming back on the exchange that IPO'd last week, I believe. And you did have that nice volume on the first day of 43 million, really, really tapering off here. Any comments on Levi coming back to be a publicly traded stock?
Yeah, unfortunately, Levi came back, and that was like the first big one of 2019. So there was a lot of euphoria around it and a lot of excitement, but maybe not the best deal that we've seen out there. Clearly, when it came on the day that it did come public last Thursday, market had a pretty significant run up to it, and then Friday we got hit pretty good. So Unfortunately, the timing of this, I don't know if is perfect for them, just because in the, what are we looking at, 1, 2, 3, 4 trading sessions that we've had so far, there's been a tremendous amount of volatility in our markets. I think overall timing, it was the right time for them to get in, end of the first quarter 2019. They kind of wanted to be the first one to come back into the market and make that mark there. But once we get hopefully some baseline in the VIX here, that the volatility will calm down just a little bit, so a company like Levi's can benefit from that.
All right. Just wrapping things up here, Jonathan. We talk about rotation in the market constantly going on. That kind of saves us from the big down days here. The rotation into the FANG and the higher beta stocks. I mean, if that's where the money's flowing, then people just may not be too worried about the markets. Just talk about anything you've seen in sector rotation.
Yeah, I mean, yes, I agree with what you said. We've clearly seen money, come out of, in a short period of time, come out of the financials and the healthcares and kind of go into those high beta stocks. I think when you look at what's occurred over last quarter and this quarter, we're continually talking about the same exact headlines, right? We're continually talking about tariffs. We're talking about North Korea, interest rates, Brexit. All these topics were the same headlines 6 months ago. So if we've weathered this storm now of getting through the end of the year and getting through the quietness of the first quarter, and these headlines are still here, but yet the market is still hanging in there, I think investors feel confident that this market can weather any negative headlines that come from one or all of those topics that I just mentioned.
I just got to hop in here with the financials here. Super dovish Fed. Who knows if rates are going to go up again, recession, further yield curve, all this stuff. I look at, the XLF, and I look at some of these bank stocks here, and, your pullback is really come back to like your January and your February, well, not January, but your February lows here. And it's kind of like a reset here for earnings, especially on something like Bank America. Do you think that, perhaps the route in the bank stocks last week off the Fed was a little overdone, or do you think this is the start of a new trend in the financials?
Yeah, I think it was a little too much. But investors, when they listen to the Fed and the dovish tone that was there and the uncertainty about interest rates moving forward, they immediately snowball onto that, and that's why we've seen that type of move in the financials. I think we're going to see that kind of quiet down, and the rotation will probably come back into that at some point. I don't know if that's just now. We'll probably have to get to the end of the quarter before that will happen. But I think that was magnified too much. I think investors got a little bit jumpy over some of the wording that we got out of DC.
All right. We've been on the line with Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, talking to us live from the floor of the New York Stock Exchange. Thanks a lot, Jonathan. We really appreciate you coming on. We'll get you on again soon.
Gentlemen, have a great day, and love to talk to you the next time we have a big IPO down here on the NYSE.
Okay, thank you. S&P,
bye.
S&P futures in the green now by a half a point at 28.2350. That makes our closing price here. Just I predicted inside day here, Dennis.
Yeah, we're really chopping around. I mean, we were up, and then we tanked, and then we came back up, and then we tanked, and now we're back up to flat again here. So what do you call that? The accordion chart for the pre-market here, Joel? That's your term, I think you've coined.
Yeah, I mean, back and forth, market settling in here. I mean, I can't completely wager on an inside day here, but so far here at 8:50 a.m., that's where trading your stocks, and you're looking for big breakouts and breakdowns. Obviously, the ones with the news, but to me, I'd be keeping a real close eye on the highs and lows from yesterday. Let's move on. A little more earnings this morning. Another housing stock trading in the green.
Yeah.
Lennar reported this morning, and they had a Q1 miss of 2 cents, 74 versus 70 cents. Maybe they're liking the sales, 3.86 billion. No, they're not liking the sales. The estimate was 4.11, and they came in at 3.86. Dennis, what did they like about this report?
I don't have the report in front of me.
Okay.
So I'm just looking at the trading action. I'm looking at the books. I'm assuming the market's pricing what it wants to price, but
Gotcha.
I'm just looking at where it can potentially go. When I look at the book here, it's an interesting buck this morning. You obviously got somebody that wants the hell out on the open because they've put a whole bunch of orders for 2,500 shares at 50.01, 50.02, 50.03, 50.04, 50.05, and 50.06.
Really?
So somebody wants out on the opening print. Yeah. So what is that up to? 1,500. It looks like 15,000 shares. Somebody wants out. It's there's no way it's not coincidental that there's somebody with 25, penny up. That's the same person probably. So somebody wants out on that opening print, and they're saying it's going to open over 50, and I'm going to get out on that opening print. So they're anticipating that this thing could open up and give it back. I don't know if they're going to be right or not, but that's what they're probably anticipating. I also see somebody in the book way up at 51.75. Interesting number. 50,000 shares. 51.75. So I would say that is major resistance because that's a big number. This thing's only traded 67,000 all morning so far. So going to have a lot of difficulty opening over 51.75. How high have we been?
How high have we been in Lennar? We are trading just off the highs of the session, 51.43. We've hit that on a couple brackets, and now we've pulled back. So
yeah, up here 51, you have 7,400. You're going to have real trouble opening over 51.75. Now it's trading 50.90, so I don't know if it's going to get back up there again. I don't know. Like, it's traded some volume, so it can open over 50, but there's some size that's going to hold it down at the open there too, just like I said with all those 2,500 share orders. So interesting, that somebody thinks it's going to open up and then give it back. Sometimes we do see these things happen. I mean, obviously we're both KB Homes and Lennar trading higher, but they have run into the number. Just grabbing the Lennar number itself because you asked me about it. 70. Yeah, so it looked like lights, 74 cents versus 75 cents. You're right. New orders were plus 24% though, so it looks like going forward that they're obviously still looking strong here. I mean, especially, one thing to consider is the reason the home builders have been so strong is there's nothing that benefits more from lower interest rates than the housing stocks.
Correct.
So when you've got a super dovish Fed, that is fantastic news for all the home builders. So even if we do get a pullback, and I don't know if we're going to get that today because stocks trading up, but let's say, it does happen. I think you've got buyers below there too, just because this is very interest rate sensitive, dovish Fed, great environment for the home builders. So I'd expect the uptrends to continue on these stocks. But again, Lennar is up from $45 just 5-6 days ago. So it's been straight up from the Fed for the last 5 days. Eventually there's going to be a pullback.
And a question here from Jimmy A. Why do some orders on the New York Stock Exchange show on the book, but sometimes large imbalances are not shown?
Market orders. Okay. The difference will be market orders. So if you put a market order in, it will show up in the imbalance feed, but it will not show up in the order book because it's not a limit order. So let's just say, easy example, stock XYZ has 50,000 to sell, and you go look at the closing price because it's all relative to the close. Stock closed at 50, and you don't see anything offered below 50. That means there's a 50,000 share market order in there. So that's the difference.
Jimmy,
limit order. It's called the limit order book, so it's only limit orders. Market orders do not show up on that book, but the market orders will show up in the imbalance feed.
All right, Jimmy A
That's
says, cool, and thanks. Real quick here, XHR Zena Hotels has been added. Will join the S&P 600 here.
Yeah, there was a few ads last night. I didn't write them down though. So sometimes I write them down to talk about on the show. We had so much material that I did not write down all the ads last night. So you got to watch it. Usually on Fridays too, you see the ads and deletes, and there's always ads and deletes. And sometimes they go up, sometimes they go down. It depends which index they're going to. Almost always, if they're going in the S&P 600, they're usually going to be up. But sometimes when stocks go in the S&P 500, they actually go down, and they never used to do that. Reason is it's all just, flows. And do they have to sell it out of the one index? It's going to impact it more than going into the other index. So believe it or not, a lot of times you think, oh, it's great news. It's going to the S&P 500. And then the stock goes down on it. It all has to do with flow. Like how many orders are going to have to be sold out of the other stocks sold out of the other index, and how many are going to have to be bought to put it in. If the net flow is negative, it can actually go down on that news.
All right. We do cover some upgrades and downgrades here. I got Susquehanna Skechers up at Susquehanna. I see it just traded up here, just kind of odd lots all over the place. Boom, boom. I see.
What are you looking at?
Skechers up at Susquehanna.
Yeah, so it's trading up here. 32.19 bid. So when you get an upgrade, it's going to trade higher. I mean, go to the ratings. You got Skechers, you got Ralph Lauren, you've got with an upgrade, you got Pizza got an upgrade, which is Papa John's. That's just a hold from Stifel though. Light, that one's interesting. LIT upgraded at Morgan Stanley. Yeah, Spinner says this is the second upgrade in a week. I don't remember the other one, but I'll take your word for it, Spinner. We know these analysts like to gang up on stocks sometimes. I mean, this stock is gearing up for a breakout here. Get above 55, and it will be in breakout mode. So I don't mind this chart, this LIT. It looks like it's ready to take out some major resistance.
This benefits from Apple rallying too, right? Don't they make the
I think so. I think you look at the Apple suppliers, and there's definitely a correlation. When Apple's strong, the Apple suppliers get stronger as well. So, but Apple rallying this morning on, and we didn't even talk about that, the Qualcomm verdict. So that's obviously nothing to do with LIT this morning. But you had multiple. So yesterday during the day, it looked like Qualcomm won one ruling. But then after hours, Apple won another one. So this is going to be a long saga. This isn't going to just be over. But this morning, if you're looking at Qualcomm, it is trading down, and Apple is trading up because Apple won one of the rulings. And obviously, it's good news for Apple, bad news for Qualcomm.
Yeah, I mean, that seems like that saga has just been going on forever.
And I think it's going to continue because you get a ruling, and then it's like, oh, there's another ruling. There's so many like different lawsuits and judges and whatever, how it's doing. I mean, we get one ruling during the day, and then you think it's over. Oh no, there's another one after hours, and now there's another court case still going on. I mean, this is, obviously with the patents and stuff, it's going to be a long saga, not going to be solved overnight.
Do you know who's going to do well off this? The lawyers.
Oh, that's always the way. The lawyers win at the end. So we should look. Is there some public legal firms? Maybe those are the ones I should invest in. Look at these public legal firms that they're trading with reasonable valuations, because the legal fees just go up and up and up. I mean, they continue to go up. I don't know. It's crazy the amount of money you pay for a lawyer is now $500, $600, $700 an hour for a good one. So crazy.
Maybe can we cheat them, and how?
Yeah,
you've heard that one before.
Yeah, I've heard that one. So
Okay.
It made me laugh.
All right.
Kronos, here's another one, downgraded to SAL, CRON this morning at Canaccord. That stock is trading down 3.9%. So for you pot stock traders out there, the reason you're seeing Kronos down is downgrade to SAL at Canaccord. There was also a downgrade coincidental last night from a small Canadian broker here. Let me just go take a look. I believe it was PI Financial. Yeah, PI Financial downgraded as well. So that's not that influential, but the Canaccord one is. And last night on the PI Financial, it was trading down to about 20, just slightly down. And then today, obviously, it's getting hit because Kronos, and you get downgraded to SAL. That spooks the market.
And we talked about this one yesterday, and we talked about the multiple lows at the 1930 to 1940 area. You match that low off the open, your 3-day low, 1922. So last 3 days, someone's been making a major stand there. That level has to hold. I see a 1943 low, a 1931 low. So there's some major support that we're only 24 cents away. On the upside, if they somehow to flip this around, I'm sure a lot of folks would like to see that closing price at 20.24. All right, Dennis, we're at the end of the show here, and you had a little announcement that you wanted to make.
Oh, just Rob Friesen, who we've had on the show quite a few times here. And actually, I should have been more prepared here. I've got to find it. He's doing a free webinar. He's going to be talking. He's got a product, Stock Odds, which is a database full of information there for people to back test different strategies and different things. But he's going to be doing a free webinar just discussing that, but also discussing pairs trading as well. He's going to be doing that tomorrow. So I'll just send you a link. He actually wrote an article just on Jesse Livermore, and he's got a link to it here in the bottom. So I will post that in the chat. I will also tweet that out to the people who are listening. And maybe, Joel, if you can post over in the YouTube chat too, that might be helpful. So just if you're interested, Rob Friesen, this is tomorrow. And I'm not going to be on the show tomorrow. I would, maybe you can mention it again when you guys are doing it. But he'll be doing that webinar tomorrow at noon, 12 Eastern.
Okay, Dennis, condolences to you and your family. Your grandma passed away.
Yeah, 94 years old, and I've talked about my grandma on the show suffering from Alzheimer's for a long time. She I had a video over from her 90th birthday, and she was good. She could have a conversation. She was having a little bit of dementia then, but she, was still with it. And then the last 2 years, she just didn't know anybody anymore. So, so she actually did pass away there just on a Sunday night. And so the funeral is actually tomorrow. So I'm not going to be here. I'll be going to my grandma's funeral. But she lived a very good life. 94. I mean, you can't ask for anything more than that. 91 good years. It was a tough last couple of years with the dementia, but she lived a very good life.
All right. So tomorrow, with Spencer being out and Dennis being out, I'm going to be joined by Jeremy Alexander Newsom, and he'll be co-hosting the show with me. And I know you guys and gals all love trades and off the open and setups and stuff, and that's Jeremy's specialty. So we've got a fun show. Looking forward to that tomorrow. We'll be looking at his charts as well, and that's on the docket. And Dennis, Joe Saluzzi is going to be on tomorrow. So
I'm going to miss Joe.
Oh yeah,
I'll try. Well, I'll be on the funeral. Actually, I'll be listening in because the funeral's not till 10 o'clock, but I've got to go down there to get ready for it.
Okay.
It's about an hour drive away.
Okay.
But maybe I'll listen to it in the car. I like listening to Joe, and obviously Jeremy Newsom's awesome as well.
All right, if you want to send me any.
It was funny, just a side joke for Jeremy Newsom. So he tweeted out a video last night, which is excellent, by the way. I mean, his videos are just excellent. And it was just funny. He was saying, "Are you trading too much?" was like the theme of the video. And he was saying, because he's trading swing trade, different time frame than me. And he was just saying a lot of days he's only doing 1 or 2 trades, and he's seen his P&L grow because he trades less. And I tweeted at him, I was like, I made 105 trades today. Am I trading too much? Just jokes, because we know my strategies are different. I'm in a different time frame. I'm trading headlines. I'm scalping. I'm doing arbitrage. I'm doing all kinds of different things. So, and 105 trades is actually on the lighter side, but I've been kind of busy lately. But anyways, I thought that was funny. So completely different time frame than me. But I agree. If you got swing trades on, I have 1 swing trade on right now. So when you're a swing trader, don't try to hit it every pitch. So it's just a different time frame.
All right, we are going to
video. Don't trade too much.
Okay, going out here, S&Ps have climbed into the green by 2 points at 28.25. Two targets on the upside, 31.75. That's your pre-market high, and then your high from yesterday at 28.35 even. On the downside, you got your close, and you have mid-range on the session at 28.23. I know that's pretty close to here, but that appears to be some intraday support this morning. Dennis, back with you on Friday. Once again, condolences to your family. Thank you in the YouTube chat, the pre-market prep chat. You guys are what makes the show good with your contributions. We'll be back with you tomorrow morning.